Good morning, everyone. Welcome to Prebell with William O'Neill India. My name is Rajshekar Kongari, Equity Research Analyst, part of Markets with India team. Before we go ahead into this podcast, the disclaimer is registration granted by SEBI, membership of BASF, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. With this disclaimer, let's move on to the main part of the podcast by analyzing Nifty's price volume action. It is very important to understand Nifty's daily price volume action to gauge the market, how it is placed at the current moment, and also have a view on the market going forward. Recently, Nifty has breached its 200 DMA, which was reclaimed last week, and it was not able to reclaim again 200 DMA. It is continuously trading below 200 DMA. As long as Nifty trades below 200 DMA, it is very difficult for the longs, that is for the investors. And broader market indices are also showing their weakness. Those two indices, Nifty mid cap and small cap indices, are also trading around their 200 DMAs. Holding their 200 DMAs is crucial for those indices as well. However, the benchmark index in the Indian market, that is Nifty, if that Nifty reaching a long-term moving average 200 DMA, indicates that the overall momentum is on the negative side. So the whatever stocks you are holding in the portfolio may not generate good returns in these times of turbulent times. It is better that if your stocks are moving sideways, you can consider them as good stocks. However, if those stocks are breaching their key moving averages, it is advised to exit those stocks. Coming to the market status, we have changed the market status to confirmed uptrend recently. However, after changing the market status to confirmed uptrend, we have seen changing in momentum in the market, and the Nifty has also added 2 distribution days. Distribution days signifies that there is weakness coming into the markets. That is Nifty falling 0.2% or more on higher than on volume higher than the previous session. So that signifies that there is a heavy amount of selling coming into the markets. Yesterday's session was also considered as a distribution day because the fall was more than 0.2% and the volume was higher than the previous session. And if there is any accumulation of distribution days from here, one or two more, and we might change the market status to under pressure. Even though we are in confirmed uptrend, given the market scenario, we are not taking fresh positions in the market. When the Nifty reclaims its 200 EMA, that is when it's better to take fresh positions in the market. Regarding the existing portfolio stocks, if there is any underperformance or stocks breaching their moving averages, are advised to take or exit from those stocks. So overall, the momentum is on the negative side. As long as Nifty stays below 200 EMA, it's a indication of weakness in the market. Nifty should reclaim its 200 EMA followed by 50 and 100 EMAs as well. As long as it trades below that level, we might see consolidation. Likewise, previously also in the month of December, we have seen the Nifty trading between 250 DMAs. So similar kind of action is expected when it trades below those moving averages. Earnings season has started for the December quarter. TCS, one of the major IT company in the country, has come up with the results. The numbers for the Q3 have met consensus estimates, which is a positive sign. Revenue declined 0.24% sequentially to 63,000 crores of rupees. Margin on the other side saw an improvement of 40 basis points to 24.5%. Profit after tax increased 4% sequentially to 12,000 crores of rupees. Coming to the employee attrition rate, it was up 70 basis points sequentially to 13%. And regarding the total headcount, it was declined sequentially by 5,000 employees declining, or overall headcount has come down by 5,000 during the quarter. GTPL Hathaway has also come up with the numbers for the December quarter. Revenue was up 4.3% to 887 crores of rupees. EBITDA margins has saw a contraction of 330 basis points to 11.9%, which is significantly higher contraction. So not so good on the EBITDA front. PAT has also seen a sharp decline of 57% to 10 crores of rupees. So overall revenue saw a growth, but EBITDA and profits have saw a decline. So not so good on the results front. IREDA has come up with the numbers. Net interest income for the quarter was up more than 39% to 622 crores of rupees. Profit on the other side was up 26% to 425 crores of rupees. Mazagon Shipbuilders has delivered sixth Scorpion class submarine vac to the Indian Navy. In the today's session, we are looking at stocks such as CESC, Equinox India, GNA Axles, Just Dial, PCBL coming up with their numbers for the December quarter. For the global market update, US market was closed yesterday. So not much action on that front. Asian markets are trading and they are trading with a negative territory. Shanghai is trading with a decline of almost 0.3%, whereas Nikkei is trading with a decline of 0.5%. On the other side, Kospi is trading with a flat basis with a bias on the negative side. GIF Nifty is indicating a muted opening for the Indian markets. Yesterday, Nifty closed above 23,520 level. So somewhere around that level is expected on the GIF Nifty, according to GIF Nifty. If that level, if the Nifty opens around that level, and we might see consolidation around that level, and as long as Nifty trades below 200 EMA, as mentioned below, it is considered weakness in the market, and fresh positions are not advised to take. For the chart of the day, we picked Aster DM Healthcare. The stock is placed very good. It is trading in ascending base pattern. Recently, it has broken out from its base pattern, but the volumes have not come in. And last 2 days action was not so good. It is coming down on lower volumes, so it is slightly forming a handle kind of portion. But if you look at the ratings are looking very good. EPS is very good at 94. Consistent growth in terms of sales and profits as well. Technical ratings starting with the RS rating at 82, ABD rating of A indicating good amount of accumulation in the stock. Number of funds section has also seen a very good improvement. Consistent growth in terms of number of funds taking position in the company, which indicates or signifies that there is good sponsorship for the company among institutional investors. Overall ratings wise, it is looking very good. Only concern is the weakness in the market is taking this stock lower as well. But when the market reverses its momentum, this kind of stocks will definitely outperform the market. Thank you for joining today's pre-bill. Have a good trading session.